Hello, let's go over this week's information on the stock market. Yeah, still in the market, still making money. Our mystery trader, well, last week it was down in 14, now it's 13.8. Uh, he may start to get nervous here if things don't turn around pretty quick. These are our sectors. Uh, Continued improvement in that small banking sector. About half of them are drifting down and half of them are drifting up, so that's actually pretty good. We have a new green line here, way up here. That is the equity produced from a new portfolio number 2, which we'll get into. Just to give you a hint, we still have some VIXM and some SVXY. One of them is long volatility, the other is short volatility. And we'll see why we have some of both in a minute here. 30% cane. We've dropped IBT and replaced it with Mexico and AIRR. And then we also have 30% DXJ, and we'll talk about these. So here are the things in our portfolio now. So the top line here is ITB. Well, it's clearly a big soaring one here, but it's dropped. Now it's right up here. It's still the best one at 166. But if you look at this yellow line that comes out at 160, okay, it doesn't get as volatile, all right? So from here to here, it has not the same drop as IBT. So whenever we look at combining things to make a portfolio with low risk, we always tend to find those things that have the least volatility and the highest return. And so our IBT is going to be replaced with a little bit of Mexico and a little bit of AIRR. This yellow line is AIRR. Mexico is this green line here. Okay. Mexico doing really good. And our equity is this mixture, and it's a very smooth line coming up here at like 108. So the QQQ all by itself with a bunch of going up and going down is about 70, something like that. And this low one here, DXJ, is a hedged Japan fund, which we'll talk about. It is very, very stable and making money. Okay. So here is, if we just had a portfolio, equals amount of short the VIX and long the VIX. Here's what they look like. So the red line is shorting the VIX. Well, it's kind of pink red. This turquoise line is long the VIX. All right. Now, for comparison, we have the QQQ here in a light orange. And so we're going to look at a blow up of this area to see the intricacies of it. But basically, we're going along where this is low. There's a market drop, so it jumps up. The market corrects itself pretty quick and comes back up screaming. And you see that it'll slowly drop, 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 drop. Short the VIX. When the market drops, it drops like a rock, and then it starts to recover just like the stock market recovers. And so when this accelerates down, you see this accelerates up. And a 50-50 mix of them gives us this green line. It's super level coming up here. and generating a lot of money without any risk in it, really. So here's the blow up of the 2020 mini crash. So the orange line is QQQ. So QQQ drops, oh, from plus 10 to minus 10, so a 20% drop and then recovers. Short the VIX has gone up to plus 10 and then comes down dramatically to a minus 50. Long the VIX had lost money until it was like a negative 20, but right at the worst, where this has lost 50%, it's made 100%. And then after bouncing around and leveling out, you see the mixture comes along, has a little bit of a bubble as everybody calms down, and then just continues on making money at a very nice rate, very stable, very steady. So that's why we have those two in our portfolio. You have to look at that combination as to why we have two things that are very risky on their own together make a very reasonable, nice backdrop to make some money with. Way better than holding cash if you use a hedged position there. So what are we adding to the portfolio? EWW, large, mid, and small cap. In other words, everything in the Mexico market. So it's just a slice of all the businesses done in Mexico. Actually pretty easy to do. There's not a lot of transaction fees because all you're doing is everything. So AIRR, small and mid-cap U.S. companies in the industrial and community banking sectors. Banking's not doing too good, and it might be hard to see, but financial services is just a little bit here. Almost all of it's down here in the industrials. So they're picking companies in the U.S., industrial companies, a few tech, but mostly industrial, that have been doing well lately. DXJ Wisdom Tree Japan Hedged Equity Fund. Its exposure to the Japanese equity markets, while at the same time neutralizing exposure to fluctuations of the Japanese yen relative to the US dollar. This is kind of a way to hedge inflation with hedging Japan currency while you invest in the Japan market. And that has been doing pretty good. So red line is QQQ, orange line is the S&P 500. The green is our new portfolio. And so we're doing a little bit steeper here on the climb and very, very stable. Not a lot of variation in it now. Long term, we've got a 21% a year return. 2006 timer has us still as a buy. We're still 100% on our 401ks. No change. We went over this earlier. There is a change to the portfolio too, and then half that where you have half cash is our portfolio one. And I think this will be good. This is good for a couple of weeks, but the market's looking better than ever right now. No change here, no change here. And yes, our timing signals still are 100% buy on the average true range, and the 200-day moving average percent is still a buy. So we're in and happy. Well, what's changed in the last week is the Russell 1000 now is kicked up pretty strong. The S&P 500 is kicking up slightly less, but kicking up nonetheless. And our NASDAQ 100 now doesn't look like it's in any danger at all of hitting our sell line. We're now in an upward trend. And you see the actual stock price is doing just fine. Looking at the two signals together, you can see the fine detail. We're almost approaching this first level where we can cut back on hedging, although we're not going to cut back this time because we're going to use that 50-50 for a while and just hang on to it since it makes money all by itself. We don't have to get too fancy just yet. So our buy signal was back here, and the volatility shows no indication of taking off anytime soon. So we should be able to remain in the market for hopefully a couple weeks here for sure. That's it. Good investing, and we'll see you next week. Goodbye.